Good morning, dears, and welcome to Super Coaching for UPSC by Textbook. And I am Pradeep, your economy mentor. And today we meet here to discuss one of the very important topic of Indian economy. And we are going to discuss that MCQs of Ramesh Singh. As I promised that we will have this session regularly. So we are going to continue regularly this session for MCQ, that revision of important chapters of Ramesh Singh through MCQ. So we are going to continue with that, and that in that regard, the very first question is, let's connect little fast. Let's connect little fast, dear, so that we can start our session. Let's connect little fast. There is already the students are there. So in that regard, the very first question is uh, let me read for you people, then we will that which of the following has or have occurred in India after the liberalization of economic policy in India? This is actually wrong PPT. Let me. This is actually wrong PPT. Let me. I am just going to upload PPT. Just 1 minute. I am going to upload the right PPT just in 1 minute. Then we are going to continue. Actually, this is just a wrong PPT. Just hold for few seconds, dears, please. This is humble request. Let's start, dears. Let's start. Hello. I am really sorry, dears. Let's start the session. Let's start the session, dear. Let me welcome you all once again. Let me welcome you all once again. This is that means I welcome you all in the good morning, Rishabh. Good morning in the YouTube session of Super Coaching by Textbook, and I am Pradeep, your economy mentor. And today we meet here to discuss that MCQs, and we are going to cover entire chapters of Ramesh Singh through MCQs. And in that session, we are going to start this session. So let's start this. I am really sorry for delay. So the thing is, let's start it. The very first question in this regard, the very first question is an increase in which of the following will lead to an increase in Indian foreign exchange reserves. The question is talking about, let me read it for you people. That question is an increase in which of the following may lead to an increase in India's foreign exchange reserves. The very first statement is net foreign investment. Second is NRI deposits. Third is external commercial borrowing. Fourth is advancement in the science and technology. Select the correct answers using the codes given below. Okay, so you have to select the right answer. So let me know the answer. Whosoever want to give the answer, let me know the answer, dear. Please let me know the answer. Let me know the answer, dears. The very first question is on your screen. Just go through it and let me know the answer. Rishabh, wrong, dear. They are asking increase in which of the following may lead to increase in India's foreign exchange reserves. That means how the India can get more and more forex. So we have to talk. That means be the case of capital account or be the case of current account. What can be the sources for increase in forex on current account, as well as what can be the sources for increasing the forex on capital account? So we have to focus on that thing. Anybody else other than Rishabh? Is there anyone who want to answer it? Is there anyone who want to answer it? Anybody else other than Rishabh? My dears, please go through the question and let me know the answer. Advancement in science and technology. I will explain. Don't worry, Rishabh. Okay, it will also be. The fourth statement should also be the right. And from here it is, that means next paragraph. So this is going to be, the fourth is also true. Fourth is also true, do years. Fourth is also true. So don't worry about that. I will explain. So dears, please try to understand. Is there anyone who want to answer it? Only one student has responded. What is about others? What is about others? Please go through the question and let me know the answer. So let me explain now. Let me explain now. It is already too much time. So when we talk about the BOP, that means let me explain it little clearly because no one has answered it. So when we talk about the BOP, balance of payment, BOP refers to balance of payment. Balance of payment is nothing but systematic record of economic interaction of one country with the rest of the world. Since we are globalized, since we adopted the LPG reform, I am not talking about that we became the open economy only after LPG reform, but we become more open after LPG reforms. Okay, so we were having the economic interaction with the rest of the world since we have the economic relation with rest of the world since the time immemorial. But after LPG reforms, that our economy became more open, and because of that, what is meaning of it? That means we have the economic interaction with rest of the world, and there is need to have the systematic record of this economic interaction with rest of the world, and that systematic record of economic interaction with the rest of the world is known as BOP. And since it is a systematic record, so this BOP has the accounts for the systematic record, and that accounts can be categorized under two categories. One is known as current account, other is known as capital account. So whenever there is going to be very clear, whenever there is going to be inflow of forex, that means the forex is coming in India, Indian territory, either on the current account or on the capital account, it will definitely boost our forex. That means it will definitely increase our forex reserves. So be the case of inflow of forex on current account, or be the case, and be the case of capital account. And this current account can further be divided under two category. Current account means which takes into account the that means trade of goods and services, because in economics there is production of two things only, either goods or services. So it can have the that means this current account has two parts. One is trade account or visible account, other is known as invisible account or service account. This trade account or visible account has the export and imports of goods, and this has the export and import of services and current transfers. So current transfer. On the capital account we have that means different. There can be foreign investment, there can be NRI deposits, there can be external commercial borrowings, and there can be that government borrowings, that is known as that means public debt. If the government is going to take that, there can be sale and purchase of the assets. So when there is going to be inflow means the forex is going to be within the territory of India, it will increase our forex reserves. So be the case of current account or be the case of capital account, it will definitely increase our forex reserves. Now come to the question. The question is, please try to go to the question up now. This is talking about that an increase in which of the following may lead to an increase in India's foreign exchange reserves. The very first statement is net foreign investment. The very first statement is net foreign investment. If it is going to be, that means it is going to be part of the capital account. That means through the net, good morning Neha, through the net investment, foreign investment, definitely what is going to be, that means it is going to be part of capital account. But if there is going to be increase in foreign investment, definitely the forex is going to increase. So this will also be the NRI deposit. If NRI deposit is going to increase, NRI deposit in capital account, that means that is going to be part of capital account. And if NRI deposit is going to increase, definitely it will increase our forex reserves. So when there is external commercial borrowing, when the government is going to do, not government, when the private sector is going to take the borrowings from outside India, that is known as external commercial borrowing. So when the private sector is going to take more and more borrowings from the outside India, that is definitely part of the forex reserves. When there is going to be increase in science and technology, that means when we are in position to increase our adopt science and technology, means we are going to adopt the new technology. When we are going to adopt new technology, be very clear, when we are going to adopt new technology, what is going to be, it is going to increase our efficiency, because we will be in position to produce more, and not only produce more, but because of new technology, because of increase in efficiency, because of new technology, adoption of new technology, it will increase our efficiency, and because of increase our efficiency, cost of production will decrease. And when the cost of production will decrease, it will definitely increase our exports. When our exports will increase, that means there will be inflow of forex. So that means that will increase our forex reserves. So this will also be, so the right answer is 1, 2, 3, 4, all are correct. Therefore right answer is D only. Rishabh, now you are correct. So the right answer is D only. Be very clear about the things. Please try to understand the things and try to conceptualize the thing holistically. Therefore the right answer is going to be D only. Is there any doubt to anyone in regard to this? Can we proceed further? We are going to proceed further, and the next question is on your screen. Just go through it and let me know the answer. Next question is on your screen. Just go through it and let me know the answer. Let me read it for you people. The question is, The question is with reference to gross domestic product. Be very clear. This is talking about with reference to gross domestic product GDP. Price deflator consider the following statement. Price deflator consider the following statements. The very first statement is it is ratio of GDP at constant price to current price. Second statement is it is more comprehensive measure of inflation as compared to consumer price index. It is more comprehensive measure of inflation as compared to consumer price index. Which of the statement given above is or are correct? They are asking about the GDP deflator. So just go through this question and let me know the answer. So the right answer, what is going to be the right answer? Anyone? What is the right answer of this question? Rishabh, wrong. Wrong answer, Rishabh. Anybody else? Neha? Please dear, class should be interactive enough. It should not be only I am telling and you are listening. This is not going to serve any purpose. Again it is wrong, dear. Anybody else? Dear, wrong. I talked about. Neha, wrong. Anybody else? Sokat. Right answer, Sokat. Right answer, Sokat. Anybody else? Can I explain it now? Let me explain now. This is talking about that this black is more better, I think. Let me change. Yeah, black is more better. So the thing is, Sunil Rathod, it is first statement is wrong, second statement is correct. That's why the answer is B. Now let me explain it. We are talking about GDP deflator. GDP deflator. GDP deflator. What is GDP deflator? GDP deflator is nothing but that means it is being that ratio of, it is nothing but ratio of current GDP with constant GDP. That means it is ratio of current GDP. Be very clear. Current GDP with constant GDP. It is not ratio of constant GDP with current GDP. That GDP deflator is nothing but current GDP upon constant GDP. That constant GDP, when constant GDP is multiplied with GDP deflator, it gives the value of current GDP. Current GDP. Just go through my class of that means when I discuss the national income accounting. I discussed national income accounting. Just go through that YouTube session of that class. So constant GDP deflate, when constant GDP is being multiplied with the GDP deflator, it gives us the current GDP. So the thing is that GDP deflator is the ratio of current GDP with constant GDP, not ratio of constant GDP with current GDP. That's why first statement is going to be wrong. Second statement is that it is GDP deflator is also a index number. It that means and it is more comprehensive. It gives that means rate of inflation in the economy, all the goods and services which is being consumed in India. Okay, that means consumer price index just talk about the certain commodity or certain goods only. That means it does not takes into account the service things. Okay, service and first of all, and second thing, in goods also they take the weightage average, whereas GDP deflator, in the GDP deflator we takes all the goods and services which is being consumed within the territory of India. That's why second statement is correct. That means it is more. But why we are not using GDP deflator for the inflation rate in comparison to CPI? Because there is time lag. That means in the GDP deflator there is automatic inclusion and exclusion of goods and services which is being consumed during the winter session, which is being consumed in the summer session. We have to accept this, that during the winter session we will consume different goods, and during the winter session we will consume different goods. So that means that this is the significance or characteristic of GDP deflator, that it automatically includes all the goods and services being consumed by India with different seasons. But the only thing is there is time lag. There is at least 3 months time lag. That means that if we want to calculate the that means the inflation rate in January, we will only be able to get it in March or April, and that monetary policy cannot delay this much. Okay, so that means because of data collection and because of lot many things there is time lag. That's why we are not using GDP deflator as the measure of inflation, rather we are using consumer price index, although GDP deflator is more comprehensive indicator of rate of inflation in India. Okay, so this is the thing, and that's why the right answer is 2 only, B only. That's why the right answer is B only. That it is first is wrong. Why it is wrong? Because it is ratio of current price with constant price. Okay, so and second statement, it is comprehensive measures. That's why it is correct. That's why the right answer is B only. Now next question is on your screen. Just go through it and let me know the answer. Next question is on your screen. Just go through it and let me know the right answer. Let me read it for you people. The question is, a fiscal consolidation is one of the objective of India's economic policy. Which of the following would help in fiscal consolidation? Okay, be very clear. This is talking about fiscal consolidation. Fiscal consolidation is one of the objective of India's economic policy. Which of the following would help in fiscal consolidation? Very first statement is enhancement in the tax revenue. Second is sourcing of more loans. Third is rationalizing of subsidy. Select the correct answer using the codes given below. Your answer should be A if 1 and 2 statements are correct. Your answer should be B if 1 and 3 statements are correct. Your answer should be C if 2 and 3 statements are correct. Your answer should be D if 1, 2 and 3 statements all are correct. So let me know the answer, please. Let me know the answer. Rishabh, just read the question then answer it, please dear. Okay, please dear, first read the answer a question, then give the answer. Papa ki Sherni, right answer. Jayant B.K. Chamka, wrong answer. Sokat, right answer. And Dasri are wrong answer. पापा की शेरनी, राइट आंसर. चमका रॉन्ग. Rishabh dear, please read the question before answering at least twice. And this is for all. And it is always keep in mind whenever you are going to attempt any question, read it twice, at least twice before answering it. So anybody else? Anybody else? Why there is confusion? They are talking about the fiscal consolidation. I think you people are very clear about the fiscal consolidation. Fiscal consolidation means right answer. Right answer, Rishabh. Right answer. Right answer. Fiscal consolidation means financial health of the government is going to improve. How the financial health of the government can improve? Rishabh, right answer, dear. Right answer now. So how the financial health of the government can improve? So do you think that when a government is going to take more and more loans, the financial health of the government is going to improve? It cannot be improved. That's why it is going to be wrong. And if second is going to be wrong, you can do it with the elimination method. That is 1 and 3 only. Do second is definitely wrong. Why it is definitely wrong? Because they are talking about fiscal consolidation. And what is the meaning of fiscal consolidation? Meaning of fiscal consolidation, fiscal means it is always related to government. If it is related to government, meaning that the government financial health is going to improve. And how the financial health, when the government is going to have more revenue. Okay, and when the government is not because of the liability but because of their assets. So when there is going to be increase in tax revenue, financial health is going to improve. When that government is going to rationalize the subsidy, if the government is going to reduce the expenditure on subsidy, the financial health is going to improve. If the government is going to take more and more loans, that means it is not going to improve. Why it is not going? Because liability of the government is going to increase. Liability of the government is going to increase, or we can say that fiscal deficit is going to increase. When the fiscal deficit is going to increase, how there can be financial consolidation? So that's why second statement is definitely wrong. That's why it is right answer is 1 and 3 only. So right answer is B only. Now we are going to proceed for the next question. Next question is on your screen. Just go through it and let me know the answer. Just go through it and let me know the answer. These are not P by Q, dears. These are not P by Q, Rishabh. That we are comprehensively. That means we are we are assimilating questions which has been asked in the last years. That is P by Q. And we are also, that means questions of Ramesh Singh, and we are also including that the UPSC may ask the question in 2024. So it is combination of all. It is combination of all. It is not only about the P by Q. It is combination of all. That means expected question which can be asked, the questions which has been already asked, and the questions from Ramesh Singh. Consider the following statement. The very first statement is fiscal deficit is defined as the excess of total expenditure of government over the total receipts. Second statement is primary deficit is defined as the revenue deficit reduced by the interest payment. Which of the statements given above is or are correct? That right answer, Sokat, very right answer. Chamka, wrong answer, dear. Please, I asked you. Papa ki sherni, right answer. Right answer. So Chamka, wrong answer. Please, yeah. I asked you people just read it twice before answering the question. So just go through it and let me know. Anybody else? Rishabh, right answer, dear. Right answer. Anybody else? What is about others? Please, dears. Anybody else? Rishu. Shall I explain it? Yeah, budget deficit plus borrowing. That is that formula which is being used in Tamil Nadu state government and book. But fiscal deficit is nothing but total need of borrowing. Okay, need of borrowing in the economy. Fiscal deficit is nothing but need of borrowing, because this budget deficit is always zero. Budget deficit is always zero because total expenditure and total receipts of the government is always equal. Total receipts and total expenditure of the government is always equal. So that's why the budget deficit is zero. That's why this fiscal deficit is nothing but need of borrowing, and there is different formula in NCERT. So just go through the NCERT as well. So go through the NCERT as well. Primary deficit is defined as the revenue deficit reduced by interest payment. That primary deficit is being defined. Primary deficit is nothing but that means fiscal deficit minus net interest payment. Primary deficit is fiscal deficit minus net interest payment. This is not revenue deficit, rather it is fiscal deficit. Fiscal deficit minus net interest payment. Net interest payment, that is primary deficit. Net interest payment. So that's why both statement is wrong. First statement is also wrong, because total expenditure minus total receipt is the part of budget deficit. That is redundant. Now there is nothing like budget deficit. There is nothing like budget deficit in that after 1997 that means make this concept redundant. Because of that there was deficit financing, and because of that there was inflation, because RBI was printing the currency. RBI was printing the currency. RBI was printing the currency. For that, because of that there was lot many inflation in the economy, so that this concept has become redundant. This concept has become redundant. We make the that means since 1997 the four concepts has become redundant. Three concepts, that is budget deficit, deficit financing. Okay, and in place of deficit financing we came with the wage and means advances. So that's why the statement 1 is wrong, statement 2 is wrong. That's why the neither 1 nor 2 is the right answer, and that is going to be the D. D is the right answer. Next question. Next question is on your screen. Just go through it and let me know the answer. Next question is on your screen. Just go through it and let me know the answer. Which of the following would include foreign direct investment in India? My dears, next question is on your screen. Just go through it and let me know the answer. Let me know the answer. Let me read it. Which of the following would include foreign direct investment in India? They are talking about foreign direct investment. Be very clear. They are not talking about foreign investment. They are talking about the foreign direct investment. Very first statement is subsidiary of the foreign companies in India. Second statement is majority foreign equity holding in Indian companies. Third statement is companies exclusively financed by the foreign companies. Fourth statement is portfolio investment. So correct, select the correct answers using the codes given below. Your answer should be A if both all four statements are correct, that is 1, 2, 3, 4. Your answer should be B if 2 and 4 is correct only. Your answer should be C if 1 and 3 is correct only. Your answer should be D if 1, 2 and 3 are correct only. So let me know the answer. Right answer, Rishabh. Right answer. Right answer. Wrong answer, Urvashi. Rishabh, yeah, correct. Portfolio is under foreign portfolio investment or foreign institutional investment. So fourth is wrong, and if you eliminate fourth, you will get the answer. At least you can eliminate two. Jamka wrong, right answer. Jamka right answer, dear. Topkat right answer, dear. Papa ki Sherni right answer. Dastri right answer. Okay, can we proceed? All students has given the right answer, so shall we proceed further? Shall we proceed further? Is there need for explanation? My dears, I am asking, is there need for explanation or it is okay? Okay, now we are going to proceed further. So the next question, if there is anyone who needs explanation, let me know. Okay, let's proceed further. And next question is on Siddharth. Do you need explanation? Siddharth, do you need explanation? Please, yeah, don't say yes or no, please. Say it will be ambiguous. It is ambiguous. It will be clear if you will say that we need explanation. Need of explanation. Sir, please explain. Yeah, please be very clear. Okay, let me. Thank you, dears. I am going to. When we talk about the, that means when we talk about the foreign investment, this can be in two parts. One is FDI, other is FPI. So FDI means foreign direct investment, FPI means foreign portfolio investment or foreign institutional investment. Okay, so what is going to be, my dear? Foreign direct investments means that, let me explain, define it, that under the foreign direct investment, the company or the investors acquires a substantial, or that means majority of shareholders, or want to, that means establish a business enterprise in Indian territory. That is foreign direct investment, my dears. My name is Pradeep, dear. Pradeep. So let me, that means a foreign direct investment is the investment through which the investors acquires or establish a business enterprise in foreign territory. So we are talking about the foreign territory. So that means we are defining it from the investor point of view. So the investor is foreigner. That's why Indian territory we are considering foreign, because for the investor it is foreign territory. So let me explain once again that the foreign direct investment is the investment through which investors acquires or establish a business enterprise in foreign territory. That is foreign. What is foreign direct investment? That means that individual has the ownership right of that company. That company belongs to that, because he is going to acquire the shares, that is equity shares, or going to establish the business enterprise. Whereas foreign direct portfolio investment means that foreign portfolio investment is the investment through which the investors purchase the security from the foreign financial market. That means from Indian market, that means Indian foreign market is going to be foreign for the investor point of view. So from the Indian security market, the foreigner is going to purchase the security. Okay, so that means the investor is going to have the anonymous relation with the company. Foreigner is not, that means, very much worried about the company. Whereas in case of FDI, the foreigner, it is the company is of the foreigner. Company is for the foreigners. So that's why it is FDI. So now when we talk about the FDI, please be very clear. That means that is going to be sources of FDI. Be very clear, the sources of FDI is in the form of MNC. MNC means multinational corporations. That means the FDI is always coming in any country, it is through MNCs only. So MNCs are going to have, that means they are going to, that means they can open their branches. There may be, they can open their branches, they can open their subsidiaries, and they can have the joint ventures. Branches means like IBM. IBM is a software company. When the IBM is going to open their software branch in India, that is known as IBM India, that will be branches. Subsidiary means the original, the parent promoter of the company, that is IBM, is same, and that IBM is going to open their that means they are going to expand their business, not only software industry but also textile. In textile they want to that means practice, they want to do business in textile. So that means the parent, that means the promoter of IBM software or IBM textile, which is in India, is same. That is the same individual, that is A only. And this is a foreigner, that is USA, and that is known as subsidiary. Because the parent company's business interest is different. If it is same, then it is branch. If that means the parent company or the promoter of parent company is going to open the, that means the different domain, business in different domain, that is subsidiary. Joint venture means they are going to have the assimilation with two or more than foreigners are going to combine, and they are going to open the branches or a subsidiary in India, and they are going to have the assimilation with Indian businessmen, and they are going to open a branch or subsidiary. So that is the meaning of FDI. This is going to be the sources, and these are going to be the part of FDI. So now focus on the question. That what is the question? Question is, which of the following would include the foreign direct investment subsidiary of foreign companies? If the foreign company subsidiary is going to be, it is definitely going to be part of FDI. Okay, majority foreign equity holding. If the foreigners are going to have the equity shareholding, it is not about only majority. If it is minority also, that means if it is more than 10%, it will be considered as FDI as per the recommendation of Arvind Mayaram committee. So this is also going to be part. Okay, companies exclusively financed by the foreign companies, so that is also going to be part of FDI. And portfolio investment, that is going to be part of FDI, that is not going to be part of FDI. That's why this is going to be wrong. Fourth statement is going to be wrong, whereas 1, 2, 3 is correct. That's why the right answer is D only. Okay, is it clear, Dhawan? Okay, thank you, dears. Now we are going to proceed further. Next question is on your screen. Just go through it and let me know the answer. Please, dears. Next question is on your screen. Just go through it and let me know the answer. Just attempt the question seriously, dears. The question is, which of the following economic actors within India would benefit from rupee depreciation? When there is going to be depreciation of rupee, which of the following are going to be beneficiary? Import intensive domestic manufacturers, import intensive domestic manufacture, infrastructure companies financed by the dollar loans, software companies with client in USA, and companies relying on the import of crude oil. Select the correct answer using the codes given below. Your answer should be A if 2 and 4 is only correct. Your answer should be B if 1, 2 and 4 are only correct. Your answer should be C if 2, 3 and 4 are only correct. And your answer should be D if all are correct. That is 1, 2, 3 and 4 all are correct. So let me know the answer. Let me know the answer, dears. Please let me know the answer. And this is very good question. Whoso attempt it correctly, I will say they have the good concept clarity. Sokat, dear. Wrong. Rishabh, right answer. Client in USA. Sorry, dears. Sokat, right answer. Sherni, right answer. Papa ki Sherni, right answer. And Dasri, right answer. Rishabh, wrong answer. Wrong answer, dear Rishabh. Shokat, right answer, dear. Right answer is B only. B only. Can anyone explain why B is right answer? Can anyone explain why B is the right answer? Dear software company with the clients in USA. That means they are talking about export. Yeah. Is there anyone who can answer that why B will be right answer? Explanation in comment section. Sokat, will you explain it? Sherni, Papa ki, will you explain it? Yeah. Will anyone explain it in comment section? Why we will be right answer? So is there need for explanation for this question? Is there need for explanation? Shall I explain it? Okay, is there anyone who want explanation? Please let me know. Is there anyone who want explanation? Okay, let me explain it. Okay, please dears, try to understand that when there is depreciation, please, there is two things. One is depreciation of currency. Don't vote, dears, please. People that students are asking for explanation, so we have to. One is appreciation of currency. That we are talking about domestic currency. Depreciation means decrease in value of domestic currency. Domestic currency. And what is the meaning of appreciation? Appreciation means increase in value of domestic currency. Please be very clear that because of depreciation, dears, our exports motivates means increase, whereas imports demotivate, decreases. Whereas because of appreciation, what is going to be? Appreciation means because imports are going to be increase and exports are going to decrease. Why? Please let me explain. Suppose $1 equal to 80 rupees. Now it becomes $1 equal to 85 rupees. Okay, so that is nothing but decrease, depreciation in the value of rupee. Let me clear it, then I will. Don't worry. First have the concept clarity, because I always believe in the concept clarity. If the value of $1 equal to 80 rupees, it reduced to $1 equal to 85, that is nothing but depreciation, and it will promote our export. Why? It will promote our exports because export for us is nothing but import for the foreigners. That means by paying $1, earlier they were able to get only 80 rupees goods or services. Now by paying $1 only, they will be in position to that means get 85 rupees of goods and services, meaning our product become that means competitive for the foreigners point of view, because export for us is nothing but import for them. So that is going to be, so that means because of depreciation of rupee, our export motivates and import demotivates. Whereas on that means appreciation, there will be reduction, there will be opposite, our exports will, because what is going to be appreciation means $1 equal to 80 rupees, now $1 equal to 75. Okay, so that means what is going to be, because of this our imports are going to be costlier. That is going to discourage our imports. Okay, and our exports are becoming incompetitive. Because that means when they were paying $1, they were able to get 80 rupees goods and services. Now they have to pay $1 and they will have to get only 75 rupees goods. So our exports are going to be incompetitive because of appreciation. So export will reduce, whereas imports will. Now come to the question. What is this? Is talking about that word appreciation. They are talking about the appreciation. So that means they are when there is going to be appreciation, import intensive domestic manufacturers. So that means imports are going to be costlier. Imports are going to be costlier. So it will reduce the imports. That's why it will be. And when there is infrastructure financed by the dollars, okay, so that means that is going to increase. That means it is going to increase the value. So this should also be software companies. That means having the clients in the foreign, that is going to decrease our exports, because exports are going to be costlier. So this is going to, that's why it will not be. And companies relying on the import of the crude oil, okay, so this is also going to be. So the right answer is going to be 1 to 4, which is V, which is B only. So the right answer is B. Okay. Is it clear? Chamka? Chamka, what is about you? Clear? So can we proceed further? Can we proceed further? Next question is on your screen. Just go through it and just go through my session of YouTube in which I have discussed balance of payment. Please go through the balance of payment session of YouTube and you will have this clarity. Next question, please. Next question. Go through the next question and let me know the answer. Consider the following statements. Consider the following statements. The very first statement is remittances from the significant component of the capital account of balance of payment statement. Second statement is USA is the largest source of total remittances received by India. Which of the following statement, which of the statements given above is or are correct? Shaukat, wrong answer. Dasri, wrong answer dear. Papa ki sherni, wrong answer. Wrong answer. Papa ki sherni, Dasni, Shaukat, Rishabh. All are wrong answer. Yeah, remittance is under the current account. Then why you are answering B? Second statement is also wrong dear. C is also wrong. B is also wrong. Rishabh, just read the question carefully. Papa ki sherni, again wrong answer. USA is not the largest source of remittances received by India, rather it is United Arab Emirates, UAE. UAE is the largest source of remittances received in India, not USA. That's why second statement is also wrong. And remittances is not part of capital account, it is part of current account. It is part of current account. Remittances are the part of current accounts. That's why one is also wrong. That's why the right answer is D. D only. Yeah, right, Papa ki Sydney. Absolutely right. Rishabh is also correct now. Rohini, it is D only, dear. We explain na that remittances are part of current account, not capital account. That's why one is wrong. And USA is not largest source of remittances. It is UAE, United Arab Emirates. That's why second is also wrong. That's why the right answer is D. Neither one nor two. Neither one nor two. And yes, yes, it is combination of both. Okay, and as our time that is already that over, so we stop here. We will continue tomorrow. And let me tell you that we are going to have the session. We are going to have the session on YouTube. Sorry, in master class. Let me explain, dears. Let me explain that the remaining questions I am going to discuss. The remaining questions I am going to discuss in master class. Master class, it is also free, but you have to download the textbook app. Just download the textbook app and join their master class. In today's session, I am going to discuss the remaining questions there. I am going to discuss the remaining question in the master class of today's, and for that, to attend the master class, you have to download the textbook app, and it is also free, so you can join there as well. You can join there as well, so that this is going to be completed. So let's that means join there, whosoever want to. And thank you very much, dears. We stop here. Thank you very much. If there is any doubt, let me know. If there is any doubt, let me know. And just to get the PDF of this, you can join my Telegram ID. To join the PDF, you have to join my Telegram ID. Just join my Telegram ID to get the PDF. Join my Telegram ID to get the PDF of this. And that is, join this Telegram ID to get the PDF. And not only that means it is going to be 10 that is 11:30. It is going to be from 11:30 to, sorry, it is from 11 to 11:30. It is from 11 to 11:30 today itself. That is AM, not PM. Okay, it is going to be 11 to 11:30. After that means after half an hour only. After half an hour, we are going to have the master class. After half an hour, we are going to have the master class, and whosoever want to attend, they can attend that there. And we will have the that means same session. So just attend there, and just to get the PDF, just join this Telegram ID, and you will get the lot many things that you can resolve any query related to UPSC preparation. And just that means it is not about the that I am just not only posting this PDF, but also you will get the that cuttings of important news articles. Not only news articles, you will also get the questions for subjective as well as objective, and you can answer the subjective questions, and I will evaluate and I will give the feedback as well. Okay, so it will be beneficiary to join this Telegram ID. Just join it, and just be beneficiary. And if you like this session, please share, subscribe to your friends as well. Just share, like and subscribe this channel, so that we will be motivated to make the same session. And we are going to continue this series. And as per your just let me know that whether you want how many days in a week, how many days you need this series. Let me know for how many days you are expecting this series. We will accordingly do it. Okay, that means currently we are having 2 days series. That means we are discussing 2 days that Ramesh Singh books questions. We are having Ramesh Singh session, the session on Ramesh Singh books, that is expected question. If you need more than 2 days, let me know in comment section, and we will have accordingly. And similarly, let me know what is going to be. Every day, Rishabh is talking about the everyday. Is there anyone who want to other opinion? That means sometimes we are discussing the current affair topics, so that is also important. Okay, so let me know other response as well. Is there anyone who want to give advice? Okay, now leave it on me. If you are not interested to tell that what should be. Okay, thank you, Rishabh. What is about others? Let's stop here. We will continue. Whoso want to attend the session of master class, they can attend the master class as well, and we will continue with the next questions there. So I welcome you all in master class as well in advance. Thank you very much, dear.